Okay, good morning, folks, and welcome to a brand new Monday morning and an exciting new trading week. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, the 23rd of March. So, we awakened this morning with the failure of Congress to pass legislation, and of course, we expected this and we got it. Absent that legislation, we would open limit down this morning, and that is exactly what has transpired. Now, I have a mixture of good news and some. Actually, we're open right now. We were limit down. We're now open. Good. So I have support levels that we hit overnight, and I actually think that they are going to hold. So I'm going to go over those levels. Here's what I think is going to play out today, folks, is that markets are going to open down at current about 3.5% off the lows of the session. And that's good stuff. Yes, it's ugly, no doubt about it. But you need to see futures bright red to get a morning washout and to get a healthy reversal. Short-term bottoms, long-term bottoms are not made of bright green futures. I warn about this all the time. So please, please do not go chasing the futures market until such time as we get a bullish key reversal on the day, on the week, whatever, depending upon your time horizon for your investment or your trade. Good morning, Trent. You dipped your toe in. What platform are you trading on that you're able to buy before? Was it 7? I think I'm only able to buy after. Or are you doing futures? All right, so I'm going to use the spiders because that's what I was looking at earlier. So you can see on the spiders here, we hit a low of 217.75, and I was looking at the charts last night, and interesting. Thanks, Trent. Gotcha. Good morning, Lo. So we wait for U.S. Open for a capitulation move down, reversal, and we go long, Bob. If we close up on the day, if in that final few minutes of trade, remember the algos will send down sell orders in the final few minutes of trade, so don't get lured in. They did that last week one day. That was on Thursday when we appeared to be closing very, very strong. What did they do? Final few minutes, they sent down sell orders. So on a bullish key reversal day, I would entertain looking at those sectors, ETFs, individual stocks of high quality that are looking good, that are closing strong with the market. And sure, I would entertain putting on a long trade. Because what we did overnight was something that's bullish, and it happened while we were sleeping. And we hit support of 217.75 on the spiders. I even tweeted it out last night that I believe that we are hitting at current a very short-term bottom, and rarely do I put myself out there like that, but I said, what the heck? So let's go to the historical chart, and I'll show you what I mean. Excuse me, my voice continues to go here. Okay, so here are the spiders on a daily basis, and this is the chart I warned of over the weekend. Beware of rounding tops on RSI and on Stokes. And the price action was abysmal. We predicted a breakdown below support. We stopped out of some of our positions on the gold miners on Friday in preparation for a sell-off. Here we are today. So let's pay attention to technical analysis. It still works, despite what the talking heads like to say. It's keeping us out of danger. Now, going to a monthly chart of the spiders. Actually, this is a weekly chart. I have it labeled wrong. We'll use a weekly chart anyway. We're going to open up down here. Now, the problem is that we will have made a new lower low, but we'll forget about that. I mean, there's no great shock that we're going to make new lower lows. But this is an all probable. By the end of the day, maybe this will hold. Maybe we'll get a reversal bar. They need to pass that legislation. And that will be the catalyst. I'm not saying it's going to be a cure-all for the market by any stretch of the imagination. I think that we're all just beginning to see the signs of weakness in the stock market. But what we need is a catalyst to have the algos buy. And overnight, we hit this support level here down at the 217, 218 mark, last seen back in March of 2017. And I think today we should bounce off of the support level, and we should get a rally, assuming that that legislation is passed. If it doesn't happen today, maybe tomorrow, but they're certainly going to feel the heat in Congress today as the markets gap down over 3.5%, and their hedge fund buddies call up screaming. Let's go through the futures action. You're seeing a bid already off the lows on the spiders. These are 30-minute charts. Now, the dollar, I was hoping for additional weakness overnight. We didn't get it. We pulled back and then bounced. And I was looking for strength in the euro, which was brought to my attention overnight. But it doesn't appear as though that rally held. Here's the euro. But what we did do is something interesting. I think that the markets are waiting for that legislation. I really do. Because it'll be dilutive to the dollar. And we broke out. This is a 4-hour chart. We broke out above this 4-hour upper band of resistance. We pulled back, did a retest. We're holding the breakout here on the euro. The euro makes up 55% of the Dixie basket. Very, very critical to have the euro rallying along with the yen to drive the dollar lower. That will get this market going. Good morning, Sam. How's everything going with you? I took a look. I didn't see any new cases overnight. Maybe they just haven't reported them yet over in Italy. Hopefully that's right. We're seeing higher lows on RSI. So the euro is gaining strength. They did not report yet. Okay. Well, fingers crossed and God bless. Now, to the yen did rally. We were stopped at resistance. No breakout yet. But I'm getting the feeling that we're beginning to see signs of life in the overseas currencies. And let's face it, folks, when you take a look at the dollar I spoke about the dollar on a quarterly basis. This is the chart I went over last night. No doubt a very bullish chart. But when you take a look at it on a weekly basis, we are extremely extended here, well above the third standard deviation Bollinger Band. And let's change this to a 4 standard deviation Bollinger Band. We are above 4 standard deviations beyond the 20-period moving average. It's really unheard of. That's how overbought we are. Hey, Brad, you're from Turkey. How is everything over in Turkey? Welcome. So why does the dollar matter? Well, when it comes down to, a lot of our followers here are precious metal traders. And what I did overnight, I wanted to draw some correlations. And this is the NUGT. Oh, you're stuck there. Oh, you're from Texas. I got you. Sorry to hear that, Brad. Best of luck to you, pal. You being treated well? All right. So here with the NUGT, we're seeing, let's go to a daily chart. Clearly, the correlation, I have gold overlaid here. In gold, in blue, I have the S&P 500. In green, I have the US dollar. And the S&P 500 clearly is trading in tighter correlation with the gold miners. Good to hear, Brad. Very good to hear. We're seeing a tight correlation between the S&P 500 and an inverse correlation with the US dollar. And there's a very big inverse correlation between the spiders and the US dollar. I think that if the dollar weakens up here today, we are going to get a rally in the S&P 500 that should put a bid under the gold miners. And you can see that even gold and the S&P 500 these past few days have a tighter correlation than what they normally do. So we'll be watching this chart very, very closely, because at some point in time, like what happened back in 2008, is that we're going to see a divergence, whereas the S&P 500 will probably continue down lower, and you'll see money gravitate or rotate into gold and the gold miners along with silver. That may not happen for another month or two. So let's just keep an open mind. It took a couple of months back then. We're expecting it to happen, but that could be off the table if the dollar does not break down. If the dollar breaks out, all bets are off the table. So let's watch the dollar. The dollar is critical. Let's go to Bitcoin. Bitcoin's very weak. It did break out. Now it's broken back down again. A breakout point failure. We always avoid those. Let's go to silver. Silver's been holding a bid lately. We're putting in higher lows now on silver. We were buyers of silver last week. Nice consolidation here. Higher lows. We're up 1.33% versus gold, which is up just over 3/4 of a percentage point. But the charts look similar. We're beginning to put in higher lows here. Back to the dollar. Still strong, showing no weakness whatsoever. The trip Qs this morning, very weak. They did manage overnight to fill the gap that had opened up, but then backed off, which is no shock. Treasuries remain strong. They're pulling back, consolidating. So yields continue to press lower, which is good for the markets. Horrible for pensions and retirees. What I was also taking a look at, I've been warning about threats of inflation, and you're seeing it in food prices. Soybeans ripping up over 1.33% overnight. They had a very good week last week. Let's go to wheat or corn, whatever else we could find here. Here's wheat. Big move up higher, up nearly 2%. Oats, they're up over a half percentage point off the highs of the session. So we are seeing inflation at the food level. Trying to find corn here. Where's my corn? Anyway, you get the drift. I don't want to keep. Oh, here it is. We're down on corn. We were higher. We pulled back. So beware of commodity pressure, ag pressure. Good morning, Cap. All right, let's circle back. Take one last look. One thing I will point out, we may be losing a little bit of momentum on RSI, which would be good. But this is a healthy consolidation. I can't discount this. Simply can't. This is the dollar. You can see I have an alert set here if and when we break the 100 mark. I'll probably be dancing the Irish jig in the street if that were to happen. But given this consolidation, it looks pretty darn strong. Perhaps the passage of that legislation, the stimulus bill, will be dilutive. Crude prices remain very, very weak. This is the Brent price, down nearly 5% overnight. Gold continues to hold gains. Let's go to NUGT. Last I looked, it did make a new daily low, which I didn't like. But there are signs of hope here. I'm going to go to I wouldn't go buying it, folks. Just because I said that, I wouldn't go buying it. We're now lifting above support. And we are now positive on the session. We were negative. We have now gone positive. And that's in the face of the S&P 500, which is down dramatically. Now, this is on light volume, right? So this bar is in total 1,100 shares. So let's keep things in perspective. Yeah, VIX is going to gap up probably, yep. So I like the consolidation here on NUGT. I don't like the fact that we made a new daily low. That being said, we are holding the lows of the session, and we are seeing a little bit of strength here. And we're not gapping down with the rest of the market like we have been. This is pretty much of a tame day for Nugget, unlike what we've seen in the past 2 weeks. So somewhat optimistic going into this new trading week. Kat, I know you're short of Apple, and you are gapping down this morning. Let's find support for you. I don't remember if we did that last night. If I'm being redundant, let me know, Cap. As a matter of fact, let's see if TrendSpider gives us a figure. So at current, we're at 223. I think that we can head down here to 217 per share. But I would expect Apple to turn with the rest of the market. Well, you're long of the front month contracts, right? So you're long of the April contracts or the puts. So in your case, I'm worried about time decay. So I would be looking to take advantage of the volatility that you're going to get this morning. And me personally, I can't give investment advice. I have to be really careful. Me personally, given the rationale I've laid out, given the fact that we are going to open up this morning, this is the spiders at historical support going back to March of 2017. We, in all probability, are going to get the passage of legislation that will provide a catalyst for the S&P 500 to at least rally. Maybe for a couple of days, maybe for a week. I have no idea how long that rally would be. So what I would be thinking about is, okay, I'm long of put options that a front month time decay is going to become a factor, and you're not really going to see the impact of that time decay until such time as Apple begins to rally. All right, then you're going to see that value evaporate. So what I would be looking to do is looking to take advantage of weakness in the market, which is blowing out the implied volatility of those options and making them more expensive and pocketing that money before we get a rally. I would not wait for the passage of that legislation. I'd be looking to book profits into weakness, given the fact that they're front month. If they were June expiration, July expiration, I may have a different story. But given the fact that they're front month, that would be my play here. I would pocket that money and go running for the hills. And if there was a restaurant open, I'd go out and have dinner. So those are my thoughts, Cap. So 217.50 appears to be good support. All right, with that, folks, I totally agree. Thinking going long for a trade. Thank you. You're welcome, Cap. I just read Trump may shut down the market trading. Is that possible? Yes, it's definitely possible. And if so, what does that do to shares and options? It's doomed for options. There's not much you can do. We're at the mercy of the markets. I hope he doesn't do that, because there's going to be a run. It's going to be like a run on the bank once they reopen. So I'd be very concerned if he did that. Where did you read that, Brad? And when was that published? That would decimate the options industry. All right. Just now, they said they would not. They said they would not in an address. All right, hopefully they won't do that, because that would be bad, very, very bad. All right, folks. With that, I'm going to say everybody have a profitable trading day. Be safe. And let's wait for that news before we decide to go bottom picking. And hopefully that 217 mark on the spiders holds and we rally. Yeah, Brad, that's good. That's a good question. Where'd you read that? Toodles. Toodles. Toodles trend. Take care, Sam. All right, we'll do a little bit of research on the. You posted the link. All right, I'm not seeing a link here, pal. No, it shows. It shows that there was a message that was retracted, but there's no link that shows. Brad, if you could publish that, that would be great. It'll be appreciated. While we're waiting, I'm just going to circle back through the futures so that viewers are entertained. I keep going back to the dollar because the dollar is everything right now. All right. Okay. All right, no worries, Brad. Thank you, though, for your participation and engagement. All right, everybody. Everybody have a profitable trading day, and I will talk to you tomorrow. Members, I will talk to you this evening on Market Wrap, and be well.